Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending September 27th, 2013. Fairly dull week in the markets. Just kind of a recap. Corn was up 3 cents, beans up 5 cents, and wheat, being the stellar of the grain market, up 37 cents, which I believe is the highest close since in July. Interesting on the week, look at a commitment to traders report here this afternoon on Friday. We have seen an increase in the short position by the managed fund money in corn, less longs in the soybeans, so shrinking of the long position in the beans, but less shorts in the wheat, and the trade has been short wheat for quite some time, so we're obviously seeing some short covering in the wheat, thus leading to a wheat corn ratio on the December futures up around $2.30. We haven't seen those type of levels in quite some time. Thus wheat is showing a little more resiliency, or a little more spark, than the corn and bean market right now. Touch in a second on what that could be on the stocks report that we have this upcoming Monday. Technically speaking, looking at corn, recent lows down that 445 area, D's corn, at least at this point, seem like fairly good support. At the same point, that market's having a difficult time going above 460, so we have a very narrow trading range in this corn market right now. Thus, that is reflected in the option value right now, as there's very little volatility in the options for what we've been accustomed to here in the last 5 to 7 years. Beans, somewhat the same way. I believe we had like a 23-24 cent trading range on beans for the week. It's not uncommon we see that on a daily basis. Last week, the bean range for the week was around 90 cents. So you can see this week has been a fairly quiet last week of September at this point. Weather-wise, we're in that transition time frame. We're not focusing much on U.S. or North American weather now. We're transitioning into the weather situation in South America as we come into the early part of their growing season, or the spring. Part of the reason the wheat market was higher this week is some concern on some cold temperatures in parts of Argentina earlier in the week. But looking at the North American or U.S. weather, most weather analysts would say there's no frost for potential for the next 2 weeks. So that situation or concern that was hanging over the market most of the summer because of the late crop is pretty well averted. Harvest activity, it's starting, and that's about all you can say at this point. We're not seeing any major movement or major harvest activity in any certain areas of the Midwest at this point. The crop is still fairly wet in most cases as far as the corn's concerned. Not quite ready in the beans, but having said that, yield observations out of the country have been good, very good in the corn up to this point. Beans seem to be good in most cases so far. Not the concern or the disaster type concerns that were taking place in the beans here just a few weeks ago, when we're in the midst of that 6-week time frame with very little or no rain. Too early to jump on the bandwagon and say the bean crop is good, but I think some of the concerns in that bean crop have been alleviated. Thus, when you drop quite a bit in the beans last week, I think the market reflected that. So harvest activity, interesting to watch as time picks up. Keep in mind, October 1st is Tuesday. Chances are we're at the slowest harvest activity as of that date, going back to 2009, which everybody remembers was a very wet fall and wet growing season. Monday at 11 a.m., the USDA will release its stocks and all position report as of September 1. Average trade guess right now, keep in mind this is basically the carryout for both corn and beans at the end of the crop year. Corn, average trade guess is 668 million. Beans, a fairly tight 126 million. Wheat, 1.933 billion bushels. That's the number to watch that could have some change in it. We've had a lot of wheat in the last year, and how is that reflected potentially in that stocks number? That'll be interesting to watch. There's also a production update for wheat, and all wheat number expectation is 2.128 billion bushels. So keep that in mind. Those will be out again at 11 a.m. on Monday. Earlier this week, in our At a Glance column, and you can also find that in our website, biscommodities.com, we put a map together showing on corn the basis differential that we're seeing in certain markets of the Midwest, namely from the southeast part of the Midwest up to the northwest part of the Midwest. Huge variance. You're seeing southeast markets and even the central part of Illinois, for example, 5 to 10 under on spot corn bids. Cedar Rapids 70 over in many areas in the northwestern part of the Midwest, well over 40 and 50 over. So what's the market telling us? Well, it depends on where you're at. Corn's kind of giving a mixed signal. If you're in the northwestern corn belt and you're a producer and you're getting ready to harvest corn, look real close at where the cash market is in your area. There's in many cases right now, there's huge premium to sell this grain today versus waiting a week or 2 weeks. In many cases right now, that premium is 30 to 60 cents. If that's the case, there should not be a bushel going. If you're in the northwest corn belt, there's not a bushel of grain of corn that should go in your bin right now. It should be rewarded at the market and take advantage of that huge basis gain that you see on the front end of this market. If you're in the southeastern corn belt, if you're a producer in most of Illinois and further to the east, it's a little different ballgame, where basis levels are actually minus the December futures. In those areas, and with carrying charges in the market, that portion of the market's telling you to hold grain to some degree. So we're getting mixed signals in the cash market right now, and it's very interesting. Right now you're pulling these basis levels on the one end really tight, and at the other side you're seeing basis levels weaken. We have heard talk of rail moving from parts of Illinois into Cedar Rapids, parts of Illinois into some northern areas of the Midwest for ethanol production. So that's going to be interesting to watch. Here in Iowa and further to the west, harvest is still a couple, 3 weeks away in most cases. But if you can capture some of that early basis premium, definitely take advantage of that. If you're still holding on to old crop corn, all we can say is God bless you, because these basis levels need to be converted and take advantage of it. There is no reason in the world to hold old crop corn at this point, if anybody is. So if you have any questions on what the market's telling you, feel free to give us a call. We can discuss that in more detail. Beans, the story's not told in the beans yet because we don't know enough on production numbers, but we have a very inverted market in the beans also, as far as in the futures. In most cases, this market's saying you don't really want to hold bean ownership much past that Christmas time frame. Again, if you want more details on some of those ideas as far as in the cash sector, please give us a call here at the office. Hog and pig report out this afternoon at 2 o'clock. Hogs for the week are up $2.70. Hogs have had a nice run here over the last few weeks. We saw a setback late last week on Friday. Gained most of that back, made new contract highs as this week wore on. The all hog number came in at 100%, right in line with a year ago. That's a little larger than what the trade was looking for. Kept for breeding came in at 100%. That's a little smaller than the trade was looking for. And marketing's also at 100%. All three categories came in at 100%, unchanged from a year ago. And that marketing number is a little larger than last year. The market will view that hog and pig report as a little bit bearish at this point. Cattle also had a good week, up $2.35. No cash trade yet at this point. But the meat market has had a decent week this week. Cash cattle sounds like it'll be a little higher. So keep these livestock figures in mind as we go along. All in all, the other 2-3 things to watch. One would be what's going on in Washington, D.C. in regards to the budget and Obamacare. Macro factors in this market have quieted down. The dollar has seen some weakening here over the last week and a half. based on some of these political situations, and also with the Fed not easing on their policy as far as bond purchases. And as far as grains are concerned, the two things to watch as we go on are, one is yield. What kind of yield numbers do we see as we progress? Right now things seem pretty positive, but there's plenty of time to go. And two, movement. We continue to hear time and time again the producer does not want to move this crop. Again, if you're in the Northwest Corn Belt and you have these basis premiums on corn, that needs to be moved. Now, get outside of that category or that area, then things may become a little different. And again, we'd be glad to talk with anyone on that. Just a quick fact or a quote for the week. Successful trading requires four things. One is knowledge. Two, discipline and courage. And then also money and the energy to merge the first three properly. If you have any questions on any of these markets or on what to do with these cash trades, feel free to call us here at the office, 1-800-373-2525, or look at us on BISCommodities.com. Again, looking at a glance there to see that basis map. And you can also catch us on Twitter, BIS_commodities. With that, have a great weekend, and we'll talk to you next week.